We're really seeing the effects of climate change today, whether it's floods, droughts, or food shortages. And governments around the world and financial institutions are increasingly recognizing that in order to solve these problems, we have to be able to define and measure them. So one of the tools we have for doing that today are these taxonomies, which help us establish which economic activities and products are beneficial to our planet and which ones are harmful. So on that note, I'm really excited today to be able to kick off our panel discussions with this session on navigating new ESG taxonomies. And with that, let's jump right in. So one of the most hotly debated areas of ESG taxonomies today is the fact that the EU has included natural gas into its green taxonomy. So publicly, some asset managers have already come out to say that, even though it has been included, they won't count it as green. I would like to ask Vincent, what's Amundi's policy on natural gas, and what's your view on this issue?
Yeah, good morning, everyone. Very happy to be here. Worth mentioning that, in fact, the EU taxonomy has included indeed gas, but also nuclear power. And at Amundi, we really believe nuclear power is compulsory in the energy mix to achieve net zero. And we are very pushing for EU to include as well nuclear power, even though some, of course, European countries were reluctant to do so. So, now we've got a EU taxonomy which is wide enough, I would say, to achieve a credible net zero ambition. But for us, taxonomy, and EU has been working a lot on it since quite some years, is a necessary step. So it's a good guide to invest, but it cannot be the only metric to manage portfolios. So it's for us and for our clients, it's just a point in time, an indication, but you need to keep in mind that under the EU taxonomy, only 5% of the MSCI World Index is taxonomy compatible. So with 5%, you cannot build a portfolio. So it's an indicator, but it can be only complemented with other approaches, because otherwise you build portfolios which are really unbalanced. So something we are really educating our clients with, because in the EU questionnaire distributors are giving to clients, if a client is saying, I want a high degree of taxonomy, let's say 20%, it's very difficult to accommodate, while 20% might not be very impressive for a client. So that's why, for us, it's a useful information, but we cannot manage only through a taxonomy.
Right. Thanks, Vincent. Yeah. And I know that, on this panel, we also have people from Asia, Edris and Colin. So for Singapore, we have come up with a traffic light sort of taxonomy system, and then you have red, yellow, and green activities depending on how aligned they are to these environmental objectives. So natural gas, like we were talking about earlier, is under yellow transition. Edris, how do you see this traffic light system affecting Maitri's investment decisions? Because it seems that it has added a layer of complexity on top of the binary green or non-green in terms of how much money should I channel to green, how much to yellow, and whether there should be a shift away from yellow as time goes by.
Good morning, everyone. Pleasure to be here. Thank you very much for your question. I would see this question as if we were to just look at the investments that we want to make in Asia, rather than putting them in buckets so easily or so quickly on the first phase. Because if we take a step back, ASEAN is a region that stands to lose 35% of GDP by 2050 if we don't work on climate change. China is also a country that stands to lose 45% of their GDP by 2100 if they don't act on climate change. So if we were to look at any decarbonization strategy that's happening within ASEAN, actually, or in Asia, for the matter of fact. There's no feasible decarbonization strategy that does not include natural gas. With this problem, with this understanding and this knowledge, we really had to then apply and understand that natural gas has to be part of the solution. And if we were to look at how the EU taxonomy was the journey of the EU taxonomy developments, they also did consider the traffic light system. And that's what ASEAN, the ASEAN taxonomy is, which is currently, my understanding is it's under public consultation. That's what it has actually proposed, the traffic light system, because it is a part of a reality here.
Mm-hmm. And how do you see that affecting Maitri's investment? How are you factoring it in? How are you preparing for it when it's finally, finalized?
Well, so because we look at the problem statement as it is part of the solution, what we do have for our sustainable fund is a coal exclusion, a thermal coal exclusion. But when we don't have necessarily a natural gas exclusion for now, but when we engage companies in Asia, that is where we talk to them about what is their transition plan like. And Maitri is a part of AIGCC. We have an Asia Electric Utility Program. When we speak to the companies, they are also quite appreciative that we understand in the context of Asia needs natural gas, but what we are trying to get them to do is, okay, if they have a strategy to phase out or phase down natural gas or fossil fuels by, say, 2040, we will engage them and ask them, is it possible to do something by 2030? So that's what we do.
Right. So seeing how different regions have different standards and definitions, if I were a company and I was operating in a sector in which Region A classified my activities as green and Region B did not, I think that I would get my financing done in Region A. So I would like to ask Colin, do you think that is an oversimplification? And what are you seeing in terms of opportunities for your bank when it comes to regulatory arbitrage?
Yeah, that's a good word to use, regulatory arbitrage. That opens up a whole can of worms when we look across the world. Taxonomies are just a method of classification, right? So I think that when the EU started their taxonomies, it put things in particular buckets, and they looked at it and said, coal is a bucket that we don't like, et cetera, et cetera, et cetera. And I think some of them we can easily agree on. And as you heard from the previous conversation, the governments who run these these processes are very much driven by their own requirements. And if the gas is turned off in Germany, someone will say that maybe that's a little less intensive than it should be, and even more so in Asia. And as you heard, the level of development has a direct impact on the kind of emphasis that you have on these different parts of the thing. So what I would agree that there is that possibility, but these are not financial instruments. You can't take a swap from New York and arbitrage it with something else in Asia, right? I mean, if you're looking at building a gas-fired power plant, as you might in a particular region, you can't export that and arbitrage it with something else in another country. That is very much tied to that particular country. So while there is that fear that you could do it, I think that as long as people understand that the overall plan is there, that you reduce your carbon emissions with what you have planned, it will be done, and there will not be immense carbon regulatory arbitrage, as you said.
Mm-hmm. So Vincent, that's from a financier's point of view. What does the asset management industry think about regulatory arbitrage?
Well, that's a very important topic because indeed we can, ESG and in particular in climate, we can see quite some big divide between countries and in particular the approaches and the tensions we are seeing in the US, where, to be fair, there are lots of different point of views and pressures to be put on asset managers regarding what they are doing. And I was in the US not long ago, and I have been accused of being woke. Because we were very active in ESG and we were against capitalism, so that's quite harsh. I was not expecting such a harsh action, to be fair. At the same time, when I go to Germany, they are very against nuclear power, and they are very also quite direct and harsh. So we need to be aware of this. And at Amundi, we have decided to have a framework which is valid across the globe, and not to arbitrate indeed. And some clients, can opt out if they want, but at least we have a backbone of ESG integration in all our funds, what we call mainstreaming, so excluding coal, for example, but not only, and to have a best-in-class approach, which is, I think, the only way forward. Taxonomy, one of the issues in taxonomy everywhere, whatever the taxonomy is that it's an exclusion-based. And in our portfolios, you prefer to have some traditional oil producers, but to engage with them and to have in our portfolios only the best in class or the ones which are really moving the right direction. And it's the only way to reconcile the trajectory and the dynamic approach, and also to still have performances in our portfolios, because the least we want is for our clients to say, I need to choose between being ESG and perform. Because if you are not able to reassure clients that being ESG is not against performance, then otherwise it will only be a niche product, and we don't want it to be a niche, we want it to be mainstream. And when you exclude, don't worry, you will always find a buyer somewhere in private sphere of the assets, and so you won't solve anything. So it's better to engage with companies, and we did a lot of work to engage with the big corporates for that trajectory. And that one also, an issue we are seeing more and more, and we are trying to educate the regulators on it. And taxonomy, at least in Europe, is quite static. While what's important for us is a trajectory. And for example, today, if you want to build a net zero portfolio and to overweight companies which are in a good trajectory, starting from a high demanding point, it's not compatible with a high degree of taxonomy. Mm-hmm. It's by nature and contradiction. So if you want to build this kind of portfolio, the universe is very, very narrow. Yeah. So at one moment in time, you need to choose some angle. So that's why for us, taxonomy is just a useful tool. Mm-hmm. But really, regulators should not think it is the alpha and omega of ESG.
Right.
At the end of the day.
Right.
Yeah, if a traffic light had only red light and green light, then it's a binary question, right? It's either in that bucket or the other bucket. But the fact that we have a amber light or orange light means that there is a view that how things are going to go. It's transition on that point, and that, in my view, determines the trajectory of how you're going. Because the red light portion is where you want to end up, i.e. not doing that particular stuff. So I think it's very useful to have, in this particular case, gas in the green, in the amber bucket, as it were.
Yeah, because for it to actually be in an amber market, you must have a timeline on when you're actually going to be shifting from yellow to green. Yeah. So that's the trajectory.
Mm-hmm. Yeah, so let's broaden the scope a little to look at the idea behind the taxonomy. Another ESG framework that we have seen in the EU, the Sustainable Finance Disclosure Regulation, or SFDR, it was introduced as a disclosure framework Nowadays, the way it's used is we have asset managers using it as a labeling device to sell Article 8, Article 9 funds. What do you think, Edris, about taxonomies? Will they have a similar result, and what would be the implications of that?
Question is for me? Oh, no.
I think, yeah.
You can answer it too, Vincent.
I think I want to take a step back and answer this question by perhaps looking at the greenwashing problem statement. If an investor today says, I would like to invest in an EV company because I think it will help with decarbonizing the world. And then I decide, okay, I would also like to add a solar or a wind company into my portfolio. And after a while, the investor thinks, you know, I think it's probably easier if I just go and invest in an index. So so the investor goes and invests in an index. And the index is a climate index or climate fund. And if a company in this climate index, so they're all directed towards decarbonization. If a company in that index is one day found to have ESG controversies such as sexual harassment allegations, racism allegations, retrenchment, lawsuits against them, technically speaking, those are social, they fall under the S bucket of issues. But what we're seeing a lot in the market is investors who invested in the climate fund are saying, hey, how did this company actually pass the ESG benchmark? There is then a blurring of line between the initial intention of the investor who wanted to invest in a climate fund, which the investor did, and then subsequent consequences that happen, which are not related to the climate strategy of the companies. Where I see taxonomies coming in is they're trying to regulate the other side of things, where what can a fund manager come up with in terms of the product? What constitutes a climate fund? What constitutes an ESG fund? What is the, say, bare minimum criteria for a fund to be labeled ESG? Inherently, there's actually two sides of this problem statement. One is the investor education, which is the intention as well as the impact that the investor wanted to create at the start, versus where the fund manager's intention was when the fund was created. The taxonomy addresses the second part, and I think with the different taxonomies that come up, the investors need to educate themselves and understand different jurisdictions have different levels of frameworks, because every country and region is at a different stage of whether it is climate journey or ESG journey. So they come up with something that's relevant for themselves. And an investor could be a global investor. So the investor would then have to self-educate. And it's a simultaneous process. So I don't see that they are distinct. It can be very confusing for the investor. I acknowledge that. But I think at this point in time, especially if we talk about the climate issue in E, which is part of ESG, the climate emergency is upon us. And we do need to take effort to try and understand what the problem actually is and how to create impact to solve the problem.
Vincent, your thoughts?
Yeah, I mean, based on the European experience, so we've got SFDR, MiFID II, and you know, the French regulator 2 weeks ago said, the head of AMF said, we are within a regulatory nightmare for the next 2 years. And I have to say that at Amundi, we are living a constant headache because regulation is super complex to be and evolving a lot, contradictory sometimes, requiring a lot of teaching, investment, and so Article 8, Article 9, now Article 9 becoming much more difficult to obtain, and therefore all funds will be Article 8, basically, more or less. And so it's I mean, regulators are also understanding more and more and learning day after day all the shortfalls. And I really, I think, given the fact that we worked on it a little bit in advance in Europe, it will be very helpful for other countries to not do the same mistakes in a way, because we did some mistakes for sure. And to be fair, it's still in the making. So, and our clients, meaning our distributors in particular, are totally lost in the classification, in the way what they can disclose or not, the way to label. So what you are seeing in Europe more and more is distributors moving away from taxonomy, classification, etc., but adopting national labels. So we've got in each European country some labels which are very different from each other. So between Belgium, Germany, Italy, Luxembourg, France, I can tell you commonalities are limited. So now to manage a pan-European fund sold anywhere in Europe, it's becoming very difficult if you want to have a label in each country, because it is not reconcilable. So that's a growing concern as well, is to have fragmentation, which each country pushing its own label under the pressure of local interests. And then it is totally against the European common market. And unfortunately, given the degree of complexity of the regulation at European levels, local regulators are more and more distancing themselves. And it's something very specific in Europe, is that there is a huge degree of interpretation at local level that is enabled by the European Commission. So you might thought we have a pan-European strong regulation. It's true looking from far away, but it's not really true in reality. Each country is very autonomous. So I am very concerned by this growing divide. And so more and more we are creating clones of funds with some variations of process to be adapted to the Febelfin label in Belgium, for example, or the Lux flag label in Luxembourg. So it's also another nightmare, to be fair, because instead of one single product, we will end up into having 12, 20 products.
Right. So Vincent talked about the growing divide between some countries. What do you think, Colin, about Asia? How are we solving that problem and putting aside differences?
Yeah. I think Vincent brings up a very good point. I mean, a lot of the issues and our clients are local. Right? Everybody's local. It's just that they're local in the country that they're local, right? And they have different views and different ways of looking at things. What we've come across is that there is a growing realization that the endpoint is the same. They all want to reach net zero, when they reach it, how they reach it, that's all different. But the endpoint is the same, and how to get there, that's the key question that we all need to look at. And the other point I was going to mention is that when we started this journey, everybody looked at ESG as a word, but it's not. It's three letters, right? It's environmental, social, and governance, and everything has a part to play. As Idris mentioned, initially people looked at it. I want to join a climate fund, thinking it's ESG, but it's not, right? It's just the climate portion of it. There are other bits of it that are equally important or even more important these days as you look at these things that come up. So what I feel is that there is a convergence of people's understanding of what they need to put into it. It's taking a bit longer than we would hope. And that's partly because Asia is very varied. If I look at the target for China, it's 2060 to reach net zero. I mean, that's one of the overall targets we want to meet. If I look for India, it's 2070, but they have different ways of meeting that, and so on and so forth. So as a bank, And as any financier or any financial institution, we need to take that into account when we set our own targets on how to make these things go forward. And taxonomies are useful in that they provide a standardized definition of what you want to look at. Targets are different in different countries, and that's where you make your adjustments, and that's where your flexibility needs to be there as a financial institution. Okay. So that's sort of the way I think that Asia is moving. The other point, of course, is that we're at a different developmental stage, and even within Asia, Australia is different from Laos, and so on and so forth. So that needs also to be taken into consideration.
Yep, absolutely. With that, we just have a couple of minutes left. Happy to take any questions from the floor. Well, if not, I have one more. So for Edris, the E part of ESG taxonomies has been in the spotlight lately. Earlier on, you were talking about the S. So with that, do you think that, to what extent do we need a social taxonomy, or do you think that issues such as supply chain, gender equality, the right to unionize, they already are issues that companies and the financial industry has incentives and mechanisms to take into account?
Let's put it this way. I think there are a lot of problem statements that we're trying to solve. ESG is a form of classification. It's principles of classification of issues that we can dissect and then try and solve it. Why is it that C is, the climate issue is out of the E, is driving the whole ESG? The way I see it is, it's quantifiable. It is, when it's quantifiable, it is easier to understand because the direction of where we want to go, as Colin was mentioning, we know that lower is better, right, in terms of emissions. So when it's easier to communicate that, it's easier to get people on board and understand, it's easier to set targets. And when we achieve it, we actually know we've achieved it. Having said that, addressing the climate issue is not just a climate or an E issue. There are a lot of interlinks between the E and the S. I think Piyush Gupta earlier mentioned a lot about just transition, and it's something that is very close to our hearts as well. When we look at trying to solve the climate issue, we are trying to solve the climate issue for people. When we are trying to solve the issue for people, then we have to try and figure out what is going to be sustainable in the long term, rather than just trying to solve the C, the climate issue, for the people, but then not include the people as part of the solution. I don't think that's going to work. So I don't think there's going to be a way that we can separate the E from the S. I think the just transition principles, that is actually part of the net zero company benchmark. That's part of the Climate Action 100 Plus. A lot of acronyms and a lot of frameworks that we talk about. The just transition is actually one of the indicators, 10 indicators. It's the 9th one. It is still in the beta mode. But the thing is, we do need to consider, the people who are working in those industries that will be affected by the decarbonization transition. Where are they going to be working at? When we look at the cost of energy in this decarbonization process, how easy or how difficult, how much is it going to affect the businesses at the end of the day? I think those issues will then affect whether or not we're able to lift more people out of poverty within ASEAN and Asia, or are we going to be keeping them or putting more people in below the poverty line? So I think it's very important to consider the E and the S issues together.